So I can't believe it. It finally came together. I mean, I will say, remember when the deal first went out there, right? It was at $14.5 billion and $120 a share. And LVMH said, we're not sweetening this bid for you, Tiffany. But they did.
Yeah, they did. And the Tiffany shareholders said, hey, that's not good enough, because they know what kind of value they have. So, but it's a really interesting, if you think about Arnault, as a billionaire, this is kind of the crowning jewel in his cap in terms of the largest acquisition he's done. And for the LVMH portfolio, Dior was a couple years ago. That was the biggest one yet. But now we've got Tiffany at the largest acquisition price. So. And
I mean, they're both unbelievable brands, luxury brands, and also under the LVMH. I mean, you have Louis Vuitton, you have Moet, right? What else is on there? You have Hennessy, I think, a few others. But
Fendi.
Fendi's under there. So it's really true luxury. What's interesting is this is nothing that would compete against Amazon. I mean, this is totally different. This is totally, there it is. I was saying Moet, there's Dom Perignon, Belvedere, Bulgari. You mentioned Dior. These are some of the great, Givenchy, all of these great names are under the LVMH brand. So it fits really, it's a good synergy, right?
It does. I mean, what it does is it gives them exposure into what's the fastest growing luxury category right now, which is jewelry. Last year it was 7% growth rate up. It's about 20 billion of the overall luxury segment. And so it's what they call, it's access into what's called hard luxury for them. And it's one of the most iconic brands. I mean, it's probably one of the only groups out there that will really help move the needle for LVMH into this category. And the fact that they're taking it private again, Alessandro, who's the CEO who came in 2 years ago, has really helped to democratize the brand. He came from LVMH himself, and so now he's got the chance to kind of not have to deal with all the pressure from shareholders and whatnot publicly, and continue that turnaround plan.
I think there's so much going on. First of all, these are brick and mortar. I mean, it's so much fun to walk on 57th Street, and then you can go into Tiffany's, you can go and into Louis Vuitton. It's very different than trying to do e-commerce. I mean, these are the kinds of things, these are the kinds of stores you actually shop around and pick what you like within the store. You don't shop in there and buy it somewhere else. I mean, when you're shopping in there, you buy what you're looking at. Coupled with the fact that tourists and the Chinese tourists in particular, how does that factor in? Because we know that it's been a little shaky, right?
Right, and so I think the Chinese consumer, luxury consumer, is a big risk, but what's happening is LVMH is going to provide the money to fuel the retail footprint, I think, the physical. So they're in China itself by Tiffany. So they're going to go to the consumer, whereas before, traditionally, the Chinese consumer traditionally actually was buying luxury outside. I think that strategy is going to shift, and they're going to use that kind of dry powder, if you will, from LVMH to fuel that growth in brick and mortar growth, retail growth.
When you look at all retail and you're looking at all these consumer, and I mean, I know that they upped this one. We mentioned the $14.5 billion actually went up to $16.2 billion, $135 a share. It's expected to close mid-2020.
Right.
The big picture on retail, what are your last thoughts?
Well, if you pull back for a second and you think on the very high end, the ultra affluent community is about 250,000 people. They represent about 30 trillion in wealth, and they represent also about 1 in every $5 spent on luxury. And so the brands that are going to tap into that group more and more, I think, are going to be the ones that are positioned, along with the ability to get to millennials. So it's a barbell approach. You got to do both, right? And so the fact that most people don't know that Tiffany on Fifth Avenue, if you go to the mezzanine floor, there's a boutique for Patek Philippe watches there. And most people don't even know that their relationship goes way back. So Tiffany's been a long-standing in terms of that kind of luxury, and they know the brick and mortar retail. They know that experience. They know how to do it.
Right, and that's a very special brand too. I mean, just a last quick thought, which I thought was really interesting about Nordstrom, just something off the cuff.
Right.
I thought Nordstrom's numbers, which came out, beat the street. The stock moved higher. They opened this large store here. People, said these department stores are left for dead.
Right.
But it turns out having the store here is helping the digital sales and will help 20 to 25%. Does that surprise you?
No, I mean, I think we're going to see the fusion of click and mortar, right? It's both and strategy. But they are, I think people threw the baby out with the bathwater and said, we got to do everything digital. But the truth is the data shows word of mouth marketing is the #1 driver of new client acquisition. Right. And most of that happens not online. It happens in real life.
Right.
So real life still needs to be there, right?